What's going on, everybody? It's TK the Agent. Welcome back to my YouTube channel. I appreciate you guys for tuning in. Today, I'm going to be answering a question that a lot of people have. Is this probably going to be a two-part video? The first one is going to be um, the documents that you need in order to, get approved for a get approved for a mortgage. I'm sorry. So I found a really good video online. It's a mortgage lady. She talks about essential documents for getting pre-approved for a mortgage, and I believe that these are the first steps that you should take. Versus showing a video on how to get approved. We need to talk about the documents that you need. Let's get organized. Let's get prepared before we go into that lender's office or we go online and try to put an application in for a home loan. So I think the first steps need to be getting your documents. So let's go ahead and see what she has to say. Like I said, she is a mortgage broker or a mortgage lender, and I believe she's in the state of Texas. Let's see what this lady has to say.
By all of the paperwork. Don't worry, I've got you covered. In this video, I'll be breaking down exactly what documents you'll
Let's pause that. Let's actually get her on the screen.
thinking about buying a home, but feeling overwhelmed by all of the paperwork. Don't worry, I've got you covered. In this video, I'll be breaking down exactly what documents you'll need in order to apply for a home loan, whether it's your first time buying a home or if you just need a little bit of a refresher. Stick around. This video can save you some time, stress, and maybe even some money. Hi there. Welcome back to the channel where we make the journey to home ownership easy and stress free. If you're new here, I'm Sabria Callis, your partner in finding and funding your new home. And today we're answering a question I get all the time for a home loan. So grab a notebook and let's get into it. Before we talk specifics, let's answer the bigger question. Why is this paperwork to verify that you're financially like giving your lender a full picture of your financial life. They'll evaluate your income, debts, assets, and credit to ensure how much house you can afford. Okay. Now, when applying for a home loan, and I've organized it into 5 key.
So if you're watching this video, I would highly advise you go ahead and get a piece of paper or a notebook with a piece of paper and a pen, because she's going to drop some information that you want to know. I know this stuff as a realtor, but I'm going to go ahead and take notes as well, because you never know. Things can change. Programs may ask for different requirements, different policies can change. But at the current moment, let's see what she has to say and see what they're asking
Categories.
for.
1, proof of identity. 2, proof of income. 3, credit documentation. 4, asset information. And 5, debt verification.
Boom. Need to have. If you don't have that, then you don't need to provide it. So the first one is proof of identity, which is an ID. Proof of income, which could be pay stubs, or a letter from your employer saying how much you actually make per year. Credit documentations, which is pretty much a credit report, credit profile report. You could pull those off of several different sites, get those reports, and then hand those over. But most likely, your lender is going to take your your social security number, and then pull the credit report themselves. Asset information. So if you own any stocks, If you got any of the documents, tax documents from TD Ameritrade, Cash App, wherever you are trading these stocks, you should give those over to them as well. And debt verification is pretty much like the credit report. They're going to be going over how much debt you have and how much you can actually afford per month. So let's keep going. Hear what she has to say.
First and foremost, proof of identity is about security. It helps lenders ensure that you are who you say you are. This protects both you and the lender from fraud, identity theft, or any other financial crimes. I want you to think about it. You're asking the lender to provide you with thousands, maybe thousands of documents. They need to confirm that you are the owner and that the loan process goes through smoothly. So next time your lender asks for proof of identity, know that you can use your license, passport, or another government information like your name, photo, and the date of birth, all of which help verify your identity. So beyond fraud prevention, lenders also need to prove your identity to comply with federal laws like the USA Patriot Act. These laws require financial institutions to verify identity before funding terrorism. Now, I know sharing personal information can feel a little nerve wracking, but rest assured, mortgage lenders are required to keep your data safe and that the loan process goes through smoothly. So, next time your lenders ask for proof of identity, know that you can use your license, passport, or another government information like your name, photo, and the date of birth. All of which help verify your identity. So beyond fraud prevention, lenders also need to prove your identity. Comment below. If you have any additional questions on the identification process, drop it in the comments below. Next is proof of income, which shows your ability to make your money. This is one of the most important pieces of the mortgage application puzzle. Why? Because lenders need to make sure that you can afford your loan. So, providing your income details allows them to evaluate your ability to repay the mortgage over time. And lenders are typically looking at your income to calculate something called your debt to income ratio or DTI. This is a percentage that shows how much of your income is used to pay off debt. A lower DTI signals that your income is being used to pay off debt. A lower DTI signals delayed payments. Now, proof of income can include recent pay stubs, W-2s, or even employment verification letters. For self-employed individuals or freelancers, you might need to submit business financial statements. Here's why this matters.
So if you are someone who works a 9 to 5 or who has a career um, and you want to purchase a house, the documents that you would need to show your proof of income is your W-2s or pay stub, an income verification or job verification from wherever you work at. So those are the ways that someone who works a job, a career, would show their proof of income. If you are a self-employed, then you would need to show some type of documents from the Federal Reserve, what it sounds like. You need, I'm sorry, from the government, tax returns. Those are things that they will look for. Pay stub, not pay stubs, but bank account, bank statements. They're looking for things of that nature if you are self-employed. So either something that's going to be a tie to the government, whether it's taxes or a bank statement. Let's keep going on.
Lenders want to make sure that you're set up for success. Verifying your income is going to help them determine the right loan amount for you so you don't end up in debt. In addition to income, lenders may also consider your savings or other assets as part of the picture. And these are things like your home, your car, details are going to show them that you're financially prepared. Even if your income varies or unexpected expenses arise, remember providing that proof of income isn't just about meeting lender requirements decision by ensuring that you can comfortably afford your mortgage. You're setting yourself up for a long-term home ownership success. I did a recent video on the burden of being house poor. Make sure you follow it down below. I think I'll link it over here to the side. One of these sides I have it, and it'll be able to kind of go into why you don't want to be house poor. So when your lender asks for proof of income, don't stress. It's all part of the process to match you with the best loan for your situation. If again, if you have any questions about the documents that you might need together, how to prepare, leave me a comment. Third on the list is credit documentation.
All right, before we get into the credit documentation, like she was stating, it's okay. It's all part of the process. And I know it feels weird, but even apartment complexes in today's time are asking for a little bit more information than they normally did. They want to see not only the first page of your bank statements, but they want to see all the pages of your bank statements and not just that page where it shows the income, sorry, the deposits and withdrawals. So when a lender is asking for your income, the sole purpose of them asking for your income is so that they can pair the right mortgage with you and and make sure that you have success with that mortgage and you're not, like she said, house poor or house trapped, where you're trapped inside of a mortgage and you're paying way too much and you're not really bringing in enough money to cover every single thing that you have obligated to pay.
Documentation. Your credit documentation, it helps the lenders assess one big question: how likely are you to repay the loan? This information is going to play a key role in determining whether you're approved and what terms you're offered. One of the first things lenders look at is your credit score. This is the three-digit number that a higher score can help you qualify for better interest rates, while a lower credit score might mean higher rates or additional requirements. Lenders also dive into your full credit report, which includes details about your credit and your current debt levels. These factors help determine whether you're eligible to receive loan assistance. So here's the thing that your credit
Yes. So, a lot of times as a buyer, we're looking at it as, oh, I'm taking on a lot of risk by purchasing this house this, let's say, $400,000. And sometimes like I tell a lot of my clients, the overall purchase price is very important, but they're structuring it in a 30-year plan. So it doesn't matter if you bought a house for $150,000, you still have 30 years to pay off that $150,000. If you have $1 million mortgage, you still have 30 years to pay it off. So they're crunching the numbers to see how much you're able to afford one monthly, then that determines how much you can afford overall. And when I say overall, the purchase price. So monthly is the most important number that you're looking for when you're getting ready to buy a house or when you're getting ready to get pre-approved. How much are you saying that I'm obligated, or when you're crunching your numbers in the underwriting as the lender slash underwriter, what number are you coming up with that says I'm able to pay a comfortable mortgage for 30 years and not have any, hiccups in the process? So the monthly payment is most important number that you need to pay attention to.
Here's the thing that your credit documentation
Oh, and like I was saying, You're taking on a risk by acquiring that loan. They're taking on a risk by issuing you a loan and putting their business at risk. So if you fail on paying that loan back, that's a hit to their mortgage company, and whoever financed that company may say, "Hey, you guys aren't really equipped to issue loans because people are defaulting on these loans. What are you guys doing in the process to see if they're able to pay for these loans or not? Are you guys using the right requirements, or are you just pushing people through so you can get a sale?" A lot of mortgage companies, they don't have time to just push people through. Yes, you do have, companies out there that probably do that, but that's not a situation that you want to be part of. So they're taking risks, you're taking risks. They're asking all of these questions and asking for all of these documents because they're trying to put on a scale how much risk are they taking by giving you a loan.
About helping you by analyzing the credit. Lenders are going to be able to determine a loan amount and a payment plan that fits your financial situation. So you don't take on more than you can handle. Typically, lenders will request authorization to pull your credit report. You may also need to provide documents for any recent credit inquiries or explain unusual activity like large debt payoffs or disputes. If your credit isn't perfect, don't worry. Many lenders do work with borrowers to find solutions. They also have programs available like FHA or VA loans that cater to buyers with lower credit scores and improve their credit. And
FHA is a beautiful loan. They only require 3.5% down. That is the most popular loan out there. From there, you have conventional and VA. VA loan is a federal housing authority loan, and it's very, very popular. I have probably, I would say, about 80 to 90% of my deals that I do are FHA loans. I work with a lot of first time home buyers. That's what I specialize in. I'm located in Atlanta, Georgia, but I specialize within Gwinnett County, Fulton County, DeKalb County, Cobb, and some of Henry. So I'm really equipped with knowledge in those areas, and I like to stick to those areas. But like I said, I work with a lot of first time home buyers, like I said, I've worked with a lot of people who sold and went on to buy another house. So they already have that knowledge of the first time home buyer, so it's a lot smoother. But yeah, this information is really for first time home buyers.
improving your credit over time can make refinancing or future loans a tad bit easier. So when your lender asks for credit documentation, remember it's not just the paperwork, it's a tool to help you secure your dream home in a way that's financially suitable. Now, let's talk about assets. Simply put it, your assets show lenders that you have the financial resources to cover the upfront costs of buying a home and to handle any unexpected expenses after the purchase. These upfront costs include your down payment, closing costs, and reserves. So, what counts as an asset? It could be money that's in your checking or your savings account, invested in the cash value of life insurance policies. Basically, anything of value that can be easily turned into cash to cover home buying expenses. Lenders want to make sure that you have enough assets to cover three main things: your down payment, closing costs, and reserves. Reserves are those extra funds left over after you've paid any upfront costs, showing the lender that you can handle a few months of mortgage payments, even if something unexpected happens. Now, here's why this matters. By verifying your assets, so a strong asset profile reduce
Pretty much what she's saying is, if you are someone who invests in stocks, who invests in bonds, who has a business, but you also probably work a job, um, or you have a lot of cash in the bank, or you have a life insurance policy that you could possibly borrow against, or just have a life insurance policy that's probably surpass what you're looking to purchase. Maybe it's a $200,000 house, but your life insurance policy is like $500,000. So those things make the lender feel more comfortable with lending you money. It's almost like if you're gonna, if let's say you have a sibling and your sibling comes to you and say, "Hey, can I borrow some money?" The first thing you're gonna think about is, man, do they have a job? Are they used to saving money, or are they used to spending a lot of money? These things are going to cross your mind, and you're so pretty much what you're doing is gauging the risk of borrowing that money out to your sibling. Pretty much the same thing the lenders are doing.
Like lower interest rates or even reduced fees. So, what will lenders ask for? They're typically going to need some proof of recent bank statements, your investment account summaries, or proof of funds. And if you're receiving a financial gift of your for your down payment, you may also need a gift letter to verify its source. Don't worry if your asset programs for first time buyers or those with limited savings. And if you're working with a professional, they can help guide you on how to strengthen their app for asset information. Remember, it's not just about ticking those boxes, it's about ensuring you're financially prepared for this exciting journey of home ownership.
Oh
And
yeah,
if you're finding this
beautiful.
video helpful so far, be sure to like it. Drop me any questions that you might have in the comments. I'm here to help. Now, let's talk about the last but not least, debt verification. Debt verification is the process that lenders use to verify obligations you already have. This is going to include credit cards, car loans, student loans, personal loans, or any other recurring payments. Lenders going to use the debt information to calculate the debt to income ratio or the DTI. And this is the percentage of your monthly income that goes toward paying debts. A lower DTI means that you have more financial stress down the road. Trust me, been there, done that. Don't want to wear the hat anymore. Bet for lenders. Most lenders, they prefer your DTI to be below 43% through some of the programs may allow a few higher ratios, but a manageable DTI shows that you're not overburdened by existing debt and that you can handle a new mortgage payment comfortably. Debt verification isn't just about evaluating your current debts. Lenders can ensure that you're not taking on more than that you can handle. It's helping you avoid any financial stress down the road. Trust me, been there, done that. Don't want to wear the hat anymore. And there you have it, folks. 5 questions to answer.
So the debt to income verification is, again, it's pretty much stating how much more debt can you bring on. Monthly payments is a form of debt. If you are obligated to have payment income from your money from your income go out into another debt service, that is money being taken away from you, potentially being able to pay for your mortgage. So what they're trying to do is just figure out how much more debt can you take on. That's it. How much more debt can you take on with all the debt that you already have? And if you reach the ceiling of 44%, you're probably not likely to get a loan. If you 43 and below, then you're likely to get approved for a loan. So the whole idea is to lower your debt and get your documents together. That's it. Get your documents together. Then move on to the next step, which is finding a lender and finding a realtor to work with. That's it. That's those are the steps. Those are the steps to getting pre-approved. You first want to get your documents together, then you want to talk to a lender and a realtor. I appreciate you guys for tuning in. This is actually going to be posted on TK is my realtor YouTube page. I have two YouTube pages. I'm going to make TK is my realtor channel my primary real estate channel, and TK the agent is going to be my secondary channel, which will be pretty much a little bit of everything that I do, not just real estate. I want to make TK is my realtor my primary real estate channel. So I know it says TK the agent, but that is a YouTube channel and it is my handle name for Instagram. But I appreciate you guys for tuning in. If you like this video, hit the like and subscribe button. And shout out to this a lady. Her name is I get that information to you for you guys. And she's on YouTube. I believe her last name is Callis or Collis. And I appreciate her video. It was very informative. And I appreciate you guys tuning in.